So this video is sponsored by Bityard, a crypto exchange with 9 out of 10 stars by the Coin Bureau guy, 400 cryptos to choose from their spot exchange, derivatives that include commodities, forex and traditional markets, as well as inverse perpetual coin futures, USDT perpetual futures and leveraged tokens. You can even set up a copy trading account so people can copy your trades, you earn commission on those trades, or you can follow other traders who have better results than you. Set an account up with a link in the description and get mystery box bonuses for completing random tasks. Bityard. Hello everybody, welcome back. I'll make a real short video on this one, just going to think about Bitcoin because we're at the eve of the CPI data. The CPI is coming out tomorrow. That's US inflation data for those who didn't know, and the reason we've been waiting for this is because we've been waiting for it since last month. Last month showed that it had slowed. It was only up 0.3% opposed to the previous month, which was 1.2% higher than the previous month of that. So it has slowed. So if we continue with that kind of slowing, it would suggest that last month was a peak of inflation. And although inflation is still running high, we should at this point see that there was a peak. Now, it doesn't mean that the Fed are going to change their course. They're probably going to continue to do what they're doing, so quantitative tightening and raising of rates, all that sort of stuff. That's required in order to bring it down to the magical 2% interest, which they're trying to get it back to. Which, it will get back there one day, but it's going to be a bumpy ride, I can tell you, until it gets there. And we're subject to anything else that might take place in the world. So inflation was always going to run high anyway, given this sort of move, which was your COVID and all this lot. But then insult to injury, bloody Russia, Ukraine, and obviously supply chain issues and stuff like that. It all has a knock-on effect, and obviously gas and oil prices do continue to go up, so that is going to go into inflation data as well. So it's not all about monetary policy, it is also external factors, global issues with supply chain and fuel prices. And obviously, you know, that is not anything really that can be dealt with in the short term. You need to see oil prices go down in order to have a positive effect on inflation, because inflation data is a combination of not just monetary policy, but external factors like that. If certain things cost more, that's inflation. You know what I mean? If food costs more because of, you know, grain shortages, and that is inflation. So all these other factors outside of what the Fed are doing, you know, that's what it is. That's why you see Europe's and the UK as well, where I am, inflation continue to go up anyway. They've been dealing with inflation in the same way as America, but to a lesser effect, because we're more at the mercy of these geopolitical events, which make big differences to our fuel prices and food to an extent as well. So anyway, boring stuff. We're supposed to be talking about Bitcoin. So all there is to say about Bitcoin is what it is. We're in a descending triangle. We're at the end of an apex, which is not a nice place to be. You'd want to see a break out of this at least 70% of the way through. It looks like we're over 90% of the way through. So if we did get a breakout, we'd be looking for rejections on any one of these areas. First area being this box coming in at the top, about 34,000. Possible first level of rejection. You've got your 10 exponential within this box here, and then on top of that we've got a 21 exponential, effectively a center of a Bollinger Band here, coming in at a nice round number of 37,500, give or take. Now if for whatever reason we do manage to pierce through those zones, the top target really would be about 50,000. So we can see that, not 50, God, that would be exciting, wouldn't it? About 40,000. So we can see 40,000 being a flat number. We've also got a 50 exponential moving average on a weekly, which is almost like what I would consider to be do or die for bull or bear markets. So you break down from here historically, not this last cycle because we have peaked down below there before, but if we break down from this in the previous cycles, that is bear market territory. Being above it is bull market territory. So we're below it, we could come up to test it and get a rejection from there. That would be a massive beast rejection, and I would imagine a lot of people will be looking at that as well, because it's a pretty clear area, not just because it's 40,000 flat and because we've got a 50 exponential moving average, but if you move it back down to a daily, you got your 200 exponential moving average there as well. So there's a lot of super resistance around that 40,000 zone. So it would be my thought process to to maybe take profit as we near that area, because I find it very unlikely that we do break through that zone while we're in this kind of situation, you know. And again, you know, like I've been buying on the way down. My highest buy order since selling around 52 or 54, whenever the Omicron was creeping around the corner, around these zones, about 52, I think. The first buy order I bought back was the 40,000. So, you know, there's been lots of buy orders going down. Now, I'm not obviously suggesting going all out. Certainly not. Certainly not. The idea would be to incrementally buy back on the way down. But if we do get a pump to lead us up to those zones, I am forecasting, and I have been for a couple of weeks now, 2 or 3 weeks, potential alt season, and that would be seen in this kind of move. So Bitcoin move up, alts move up as well, outperforming, move either into Bitcoin or back into Tether and wait for the inevitable move back down again, and then move back into Bitcoin at lower zones. So it might sound a little complicated, and it might sound a little hopium-ish, but I've been expecting the CPI to show favourable data this time round, and I think that will have a positive effect on the market. But because we don't know what it is, and because I suppose, you know, looking at the way that Europe has gone, which is continuing to go higher and higher and higher, we can't be guaranteed that inflation in the US has peaked. There's no guarantee there. And even if it has peaked, it might only be by a tiny slice and not enough to really cause any effect in the markets. If for whatever reason it has gone higher, then yeah, that's a problem. That would be a problem. And you probably see an immediate dump down from there. So again, you know, the chart is, you know, we can look at areas on the chart to, you know, to sell at or on the way up. We can expect to break out to be sold off as we move up into these zones. And obviously, you know, when we go to a weekly, there are areas of significance which we've got marked out for potential bottoms on this chart. But the chart, you know, is useful to an extent. You know, like I say, we've got certain reads here, our bullish divergence here, and bullish divergence here. Each time that these have happened, they have signaled the bottom, and the bottom looks relatively appealing at this 200 simple moving average area, which is around about 22,000 or so. So again, we are forming a bullish divergence here, and it's very pronounced, so it could take place from any price on the way down. So this is why we have to mark this area off. But outside of that, yeah, we're just gonna have to wait for that data to come through. Has it peaked? Has it gone up? What the hell's going on? And then from that, we will see the effect on the markets. You can see that the market basically has been pretty undecided, really, throughout this period. I've been away, like I say, for a whole week, and look at the daily chart, sideways AF. There's really been nothing going on with it, so it was a good time to take a holiday anyway, because price action effectively went on holiday as well. So we'll see more volatility, no doubt, take place tomorrow. But if we do break out, it will likely be sold off probably before it gets to 40, but 40 would be the peak on this run up. And look, that would be a decent move. Let's just say we managed to make it up there. 30% move, fair play. It's a tradable event, but I wouldn't try to get clever and guess which way it's going to go, even though I expect the inflation data to be favourable. I wouldn't want to be taking any leveraged positions in the anticipation for a positive inflation report, you know. So we'll leave it and wait and see. Like I say, this is a spot trader's game at the moment rather than futures. If we do pump up and we get close to 40,000, then yeah, potential shorts could be applied at that level. But right this very moment in time, it's neither here nor there. Most boring chart I've seen in a long time. I can't remember Bitcoin being this boring in years. In fact, it's the most boring range it's been in actual years. So I'll leave it with you there. But I hope you have a nice day. Feel free to join the Telegram. It's free. And yeah, take it easy.